Hey folks, Serge Berger here. Well, it was Tuesday, March the 21st, when we finally got a 1% correction in the broader US stock market for the first time in what seems to have been ages. And I think this warrants a bit of an update, particularly as I'm hearing a lot of stuff out there that explanations that are kind of a little bit fishy in my opinion. So let's have a look at what actually took place. Well, if we start with the S&P 500 here, as I'm recording this right now, you can see basically this has brought us at the end of Tuesday's price action, has basically gotten us to the point where the S&P 500 has corrected just about, let's call it a little bit more than 2%, 2.5%. The Russell 2000, for its part, just again for some perspective, has actually corrected just about 5%. And you can see that the Russell 2000, all that this has done so far is it's brought the indices back to the lower end of a trading range, which on the Russell 2000, the ETF that we use is the IWM ETF for that, has gotten it to about it's called the mid 133s. The range has been 133 to 133.50 to maybe about 140 or so on the upside. So about 7 points. So all we've done is gotten back to the lower end of that range. Now, this also coincides, roughly speaking, with the 100-day moving average. That's that blue line. So what I've done, what I've told my Clubhouse members and my students and my clients very clearly is that a day like we had on Tuesday certainly is a day that if you were long from a swing trading perspective, it's a day that you got to take off some risk just to respect the price action. That doesn't mean, however, that you can't go in and start looking for new buying opportunities once we see a bullish reversal. Okay, so it's a very simple tactical approach, and that's really what I wanted to cover today in the update. Because a lot of people always ask me, how do you deal with quick, severe turns to the downside or to the upside if we're trending lower? It's the same thing, right? So really, the way is to get for one, you want to be quite careful once you start to see certain things like a skew index spike higher like we've had on Monday. If you guys want to see that real quick, I'll quickly just bring that up for you. So the skew index coming into this Monday, which was the 20th of March, was at a point that it hadn't been in a long time. I'll show you, came up to about 154. We hadn't seen that in a long time. This is basically what options players were kind of pricing in. They were bidding up out of the money call or out of the money options, I should say. So basically, indicating that there's a decent likelihood of an outsized move, and of course that has been correct. So for one, you want to be aware when something like that happens. But once you then actually see price being confirmed, in other words, the S&P 500, as you saw here in the SPY, actually starts breaking lower with that move, you want to keep it in perspective. So number one, yes, you take some off just for risk management purposes. You got to take some off once price makes a move. Doesn't mean you can't add in. Again, one of the biggest mistakes I see people make is they might get out of something, right? In this case, maybe let's say they were long the S&P 500, but then they forget that they can get back in. Or they're afraid to get out of the position. In this case, maybe yesterday people were afraid to get out of that position because they forget that you can actually get back in. There's nothing wrong with getting out and then getting back in. There's really nothing wrong with that, okay? So you just have to make sure you understand it. So in my opinion, the S&P 500 has now gotten back to its 50-day moving average. That's the yellow line you can see on the chart right here. And again, to me, it's a wait and see right now. You want to wait for a bullish reversal to take place before you get back in. Again, so far this is a very orderly pullback. I wouldn't freak out. There's no reason to freak out ever. It's just a matter of sticking to your process. So my job isn't necessarily to tell you what exactly to do from a trading perspective, what to buy, when to buy it. It's to show you the process involved that has served me well over the years, and to make sure you get you to a point where you're using a process that not only works but fits your lifestyle. So many people out there trying to tout trading styles or investing styles that just don't work from a lifestyle perspective, because the reality is most people have jobs, most people work, or they're retired or semi-retired, and they don't want to or have the time even to spend like 6 hours a day trading the markets, which by the way is usually not a good idea because you end up over trading and actually losing money. So anyway, so that's the process here. So again, the takeaway from my point of view here is so far it's been an orderly pullback. Yes, you want to reduce risk on a pullback like that, and once you see a bullish reversal and things start to get biddy again, that's when you start buying. But I don't think this is time to freak out just yet. Give it some time, reduce some risk, and we'll see if we can buy the next bullish reversal. Hope this makes sense, guys, and I'll see you in the next video. Also, guys, don't forget we're having our next Steady Trader Mastermind Workshop in Arlington, Texas, April 20th to 21st. It's a great opportunity to get on the fast path to success in the stock market with a 2-day intense course. We're also going to have some fun. You're going to learn all the ins and outs of trading stocks. We're going to look at options. We're going to build a personalized trading plan just for you. For each attendee, we're going to work on a personalized trading plan to make sure you can fit it into your lifestyle, put you on the fast path to success. You'll get documentation with the course. You'll get to do networking with like-minded traders and investors. It's really a once-in-a-lifetime opportunity and a special, unique educational event. So make sure you sign up for that. If you have any questions, all you got to do is go to the link down below in the video, which will take you to the information page where you can read more about it. And if you have questions, please shoot us an email.